Now let's get some insights on the news shaping the markets. And for that, let's welcome in Matt Lloyd. He's Chief Investment Strategist at Advisors Asset Management. Markets are struggling for direction right now, Matt. Thank you so much for joining us. Now, we see what 2024 is shaping out to be very undecided when it comes to that. But can I just take a really quick step back, because you talk a lot about just this contradiction that we're seeing between the actual data and maybe the perception of the data. Talk to me about that first and set the scene.
Yeah, it's great to be with you, Renita. When you look at it, you get bombarded with this confluence of data out there, and whether you look at it daily and whether you look at it longer term, you're trying to balance this out. It's a consilience type of aspect, trying to bridge the long term and the immediate term with that. And so when we look at the data points, and we look at the preponderance of people pricing in, a soft landing. What you start to look at is that there's some fractures in some of the things that create the bullish case, and it's not apparent. You really have to dig down deep into it. And the job numbers that we get, 9 out of the last 11, 10 out of the last 11 months in 23 were revised downward. There's a big discrepancy between that and the household survey. So the strongest bullish point is what's going on with the labor market, yet there's some fractures inside that data. And then when you look at the Fed pivot, this follows a historical pattern that when the Fed does pivot, you tend to see that there's a little bit of a spike in equity markets, risk on, but then the reason why they're cutting is really the material thing. And so it's a confirmation bias market where we all get married to a narrative, so to speak. And when you do that, it's easy to get divorced from reality. So we're trying to create kind of a balanced approach in this aspect, that the market is quite a bit of assumptions in Fed rate cuts and earnings growth, but some of that is not really materializing as quickly or maybe as prominently as they think. So you really have this dichotomy, and it's really basically choose your own adventure for investors.
Absolutely. You said it spot on when you talked about the confirmation bias. Pretty much any piece of data can support any thought, any conclusion that people have these days. But let's talk about today now. Markets are struggling for direction as we start 2024. What do you think is happening, and where could we go from here? Just talk about this week alone.
Yeah, this week alone, it's basically just kind of a recalibration. You had some window dressing late last year. You see kind of, like we said, the dichotomy. You see a large amount of treasury holdings in households' holdings, or they're about 2.3 trillion, biggest ever. Now that's understandable, but usually when it spikes is usually at the tail end of a recession when there's a massive risk off. But when you look at the large amount of liquidity that has been moved into money market funds and so forth, a lot of people have believed that that's going to be earmarked for risk assets, when in actuality, it might be far less than we expect, just because there's a big shift from banks, savings accounts into money market funds for the rate of return and the low anemic returns there. So I think what you see in the market this week, and actually probably moving forward, is a recalibration in the fact that, is there 3 rate cuts? Is there 2? Is there 10? And so now, as the kind of the silt starts to settle, I think people start to realize, well, maybe the assumptions are too big as far as the rate cuts, as far as timing goes. And that's being disputed by the Fed, although the Fed, to their credit or detriment, are saying many different things to keep the markets guessing.
You're absolutely right. Just from the weekend to yesterday alone, we saw a couple of different stories, right? But also, big banks kick off earnings this week. What are you looking forward to the most?
Well, can we see a little bit more on the cost savings? Obviously, with the long-term rates, what that does is it benefits and has a hurts to them. You've had really good performance. In fact, actually, the European banks, in light of all the things that have happened there, the consternation, have outperformed the U.S. banks over the last 2 years. So it's really kind of more of a global phenomenon. We try to balance out the weather, the season, and the climate when you look at all these different facets. I think when we look at earnings, we saw a lot of job cuts in the banking sector in general. You have Basel III that's coming out, and how that's going to impact. Get some more guidance on that. I think it's going to be pretty expectedly to be benign in a sense, but forward forecasts are really what we're going to be looking at as far as that goes. And I think that that'll be a good harbinger for what the earnings here and what happens to expectations overall in 24.
All right, Matt Lloyd, we're going to have to leave it there. Thank you so much for bringing your insights. This is Matt Lloyd from Advisors Asset Management.